Mic check. Mic check. 1 2 1 2. What's going on, everyone? This is Jordan with Conquer Trading and Investing. Getting ready here for our Tuesday live stream. Great to be back with all of you. I'm excited to be back with all of you. I have to tell you, last night we had a wonderful time in Mexico, and fantastic to be home. And you know what? I was running a fever last night, light fever 101. And either which way, I said, you know what? I missed being with everyone on Friday. I miss being with everyone on Monday. No matter what, I will be up there tomorrow, regardless. Thanks be to God, though. Feeling good today. The fever's broke. We're ready to get going over here. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. We're going to take a look at the markets together today. Of course, the title of this video is something or other of a other. The title of this video is whether or not the central bank rate hiking cycle has begun. That's talking about what happened overnight with the Central Bank of Australia raising rates less than expected. Expectation was a 2.85% hike. They came in with a 2.6. As you all know, prior to the rate hiking cycle beginning, when everyone said it was impossible for them to raise rates and you can't taper a Ponzi, nevertheless raise rates on it, we were watching central banks. I believe the first central bank was the Bank of New Zealand. Then we watched the Bank of England, and we said central banks act in unison. This might be a clue to what happens next out of the Federal Reserve in March. They got off liftoff and began the hiking cycle. Is this a clue of what's to come right now? If you noticed over the last week or so, we were looking at some not only pretty tremendous fear in the markets, we were also looking at extreme, let's say, bearishness, emotional tweets coming from all different accounts. Called out a couple of big accounts on that myself, and personally letting them know if they get their turn wrong, it's going to look really bad for the brands that they're ambassadors of, those that represent Bitcoin. Not good being overly bearish on the turn. Be careful out there, be balanced. And whether or not this is the turn of the central bank hiking cycle or not, it does not mean by any means we are out of the woods. Let's think of what's happening right now more as a bounce. We are seeing, let's all right, first let's start out in the intermediate term, like near to intermediate term. What happens over the next month? What happens over the next 2 to 3 months? Right now, we still are data dependent. We can't even begin to go that far. This week that we're in currently right over here on Tuesday, it looks that we are experiencing a bounce off the lows. Let's see if this bounce could even get a little bit of legs and become some type of counter trend rally. Let's just leave it at that. We're taking it all as it comes. We got over at the end of the week on Friday, we have a big non-farm payrolls. That's going to be a big deal to the market. And then after that, next week is really when the market's going to start focusing in on what is the CPI that's coming out on October the 13th, Tuesday. That's something that will either squash this rally, if assuming the rally continues, or appropriately so, this bounce, if it continues. It's going to be data dependent, really, what happens as we look at next week. By the way, we got fireworks. We got the FOMC meeting minutes. That's going to be huge, and it's huge right now because it's true. A lot of people don't like to talk about the fact that central bank speakers, which we see a litany of, that the central bank's communications are key, but they are. They're running the monetary policy, and right now they are in the midst of an enormous, quick and sharp tightening cycle. A lot of people have cause for concern, rightfully so. And you saw, I don't have to tell you, you saw calls from the UN telling the Fed, hey, let's, could you ease up? IMF echoing that call yesterday, saying to the Fed. Now, whether or not the Federal Reserve would listen to any of those institutions or not, I have no idea. But I would like to think that they probably all act in unison, and that potentially, I might be reaching here, but, allow me the ability to do so. Maybe that the Fed is looking for a little bit of cover, and it's a little bit easier for the Fed to begin its pivot to lesser degree of easing. There are some bright minds out there who think the last rate hike we saw was the last one of the cycle. I have no idea. My expectations are that we are looking at a rate hike coming in November. Now, things could change between now and November. Right now, I remain optimistically cautious, and I'm going to show you why from the charts. Now, we've just moved, or we're just moving to optimistically cautious. We were just plain straight out cautious last week. We were getting ready as equity markets taking out the June low. Was that a double bottom? I don't know. I'm asking that for you. Was that, and Bitcoin and crypto were looking at the abyss. So there's no way we were optimistically cautious last week. At this particular point in time, as we see the Bitcoin here on the linear scale breaking out from the November high, right? Then you come back down, obviously you have the April high. And then over here, you have that touch over here just from September. And you can see now we're breaking out here to the upside. It's a 3-day. Let me jump down over here, and you can see that nice breakout that's occurring today on linear. And that makes us now optimistically cautious. And that's fine. That's what we want to do. We want to be on the right side, and that's the right posture right now. We have to be optimistic over here as we have this nice technical trend line break. It's a big deal. It is on linear. If you've been following my work, you know I give a lot more credence to what happens on the log scale for any type of technical breakdowns or repairs. This is a repair occurring. We have to pay attention to it. If you look over here at Fiat Hedge pointing out, I'm not familiar with this pattern, but the target of the pattern is very interesting, and I'm about to show you why right now. And he has what he calls a bullish dragon, and he's saying that the target over here is somewhere just above, right? 26,500 in that area. So what's really interesting about that target that he has over here is because it's my, let's say, my belief that this pattern over here, this break of this trend line, it could get a lot of people really optimistic, and it could draw a lot of traders in. They'll be taking that trend line break over here, and they're going to be doing it, and that's good. I think that they should, right? It's an amazing place to manage your risk off of. Get back below the trend line, you know you're wrong. Whether or not you're putting your stop loss like somewhere over here, which is fantastic, you're able to really manage your risk off that trade. If you come back down and take out that line, you're wrong on the trade. You might want to do down over here, the low of the move, and give it a little bit more room. Neither one of those is right or wrong. And both of them, by the way, if you're moving into somewhere around 26,000, have an outstandingly amazing risk to reward. Now, just because you have a trade like this setting up, it doesn't mean that if you're targeting 26,000, it's like you're not entitled to that or anything like that. Actually, you're much better off expecting that you're going to get stopped out on the trade. And if you have that type of posture, you're going to go a lot further. Nevertheless, let's keep an eye on this area of expectations of this bullish dragon pattern, which, again, I'm not familiar with the pattern. I want to draw your attention over here towards the potential take profit area on that. And that's because what I believe is much more important, or people need to be cautious of, is you can see over here, this is looking at it on log scale. And we have a little bit, it's light. You can see that it's a light line over here, a light area of resistance coming in just overhead. You could see also, if you follow the mouse over to the left, you could see not only is it the trend line resistance coming in, you could see over here this area of local, right, local support, right, which was once resistance over here and a touch over here. Market's paying attention to that line. It's right around 20,850, 55. And you could see that you have horizontal local resistance and that trend line resistance over there break out. And then all of a sudden, you're looking at what is a really important trend line. This is on log scale over here. And that happens to coincide with the take profit of Fiat Hedges, bullish. I think it's called an inverted dragon, but y'all get the point over here. And that's something that really you need to be cautious coming into that level if we do rally. Right? So if this bounce turns into a rally, once we get towards, by the way, coming off cold, right? 4 days, we haven't been together. We kind of got a little bit of a flow going, and that's welcomed. If you enjoy being here at any point, please go ahead and support me, support the channel. hit that like button. Go ahead and even share this with a friend to help build out the community. Really appreciate of that. And you could see that coming into this resistance, that's something that we really need to be cautious about, because at this point, if price were to make it that far, at that point, I think that people would have become a little bit more emotionally tied to the bullish case for Bitcoin. There's danger ahead. We want to get above that level before we start looking at an actual major repair taking place. What we're looking at today is nice, and it just turns us cautiously optimistic. We have a major repair above that needs to be made, and that's what I wanted to communicate to you today. Let's continue and just take a look at Bitcoin before we move any further. And we are seeing what looks like a nice rounding bottoming occur. That's bullish. I'm going to call it as it is, right? And that's beautiful to see. And what we're looking at over here, our expectations are that likely there's a good chance that this bounce that we're seeing across risk markets has a good chance of continuing at least towards the end of the week, where you might see, as we looked at the calendar already for next week, and next week is a big week with not only the FOMC meeting minutes, but the CPI, you could see at some point between the end of this week, early next week, a lot of people squaring up positions. That would be normal behavior. Let's see, I want to get off the blue, but I guess we're keeping the blue because we're going to keep going. All right, so what else we got today? We have a big deal. We have CTM 2.0 picking up a buy entry here this morning, and it is getting ready to flip off to the, oh, it's Ethereum. Sorry about that. Let me get to the Bitcoin. We had Bitcoin over here flipping off, a green flag over here, a green arrow, flipping to the buy side out of this bottom, right? And that's beautiful. I love, look, I'm all about making money. I'm all about making money on both sides. But you didn't see me emotional, right? We had Ethereum closing out over here, a nice little scalp over here, 9.1% to the downside. As this was, by the way, just building up profit in the downside and on the verge of breaking down. And if that would have broke down, to be holding that nice short over here would have been absolutely beautiful. But zero emotion involved. It's just about business. I saw a lot of accounts last week that have mega bearish bias, and they were just so emotional last week. So, and not only so emotional, I mean, it was a pretty big deal. I was away, but over the weekend, as you see that people looking about like systematic blowups occurring and people expecting a Monday open to be a major gap down and in the red, and that didn't happen, not paying attention to the tape and automatically just looking at calling out like sell levels early. I mean, I guess it's a good sign. You want to see that type of behavior if we're looking to put in any type of counter trend rally. And anything that we put in right now is counter trend. We're not trying to call and or pick a bottom. We're just trying to stay on the right side of the flows. The flows right now are moving to the upside. Anytime I take any type of entry, my expectations are it's just going to be stopped out. There's nothing different with these. As we took the Ethereum short over here, we thought we were taking that short into a bad area, right? Into support. People didn't want to do it. Nevertheless, it wound up being, a nice little 9.1% gain. It's very welcomed, as is the green side popping off today. I like being on the green side, and it's really, but I have to make the observation. It's really neat how CTM 2.0, which is a systematic system, was able to pick up the buy entry exactly on the technical breakout over here of the trend line break. That's pretty neat. I like that. I enjoy that type of stuff, seeing it happen in real time. And there we are. Ethereum is not yet taking along. We're still waiting for any type of signal. Are we getting close? Hold on one second. I want to see. I'm just getting to work here this morning as well. Not just yet. We're still on the sidelines. And that's good because Ethereum is what? It's been weaker, right? We've seen Ethereum ever since post-merge with a little bit, let's say, more pressure on it, a little bit weaker. And although it's closing out a nice short side trade over here and it's getting neutral, it's not ready yet to participate in the long side. We'll be watching that to see if there's any further extension over there. Did want to point out the US dollar. I don't know if I have a chart pulled up over. I do. If you remember that we were talking about last week, the DXY tagging that 14-year trend line, we did it here live. And that we said that if we lose this area of what we did here live as well, that one session pointing out the cloning this prime trend line over here and just adding it up. If we lost this area, right, and then we lost this next one, we'd be looking at mean reversion taking place. Mean reversion would just be going back towards the center of this channel. That's where we are today. And right on cue, what happens next? You know what? I don't know. We just were able to, as people were starting to get again and once again very overly postured in one direction, all of a sudden we're going straight to 120. But we were coming into that resistance, that strong. You can follow the line over here with your eyes. We were coming into that strong resistance, and the resistance held. And it held because of what happened that day. That was the day we saw the Bank of England restart QE, right? We saw it capitulate. So we're seeing not just the Bank of Australia with the lesser rate hike than expected today. We're seeing other central banks over there meeting exhaustion, pivoting, and it was a big deal. I wouldn't say it's a trend change in the dollar. In order to see any type of, let's say, trend change occurring, we need to break below, as we talked about on our Thursday session, right over here, the bottom of this yellow line. That's a one touch, by the way, a one touch trend line, because we took our prime trend line, we cloned it to the upside to get these lines up there, and then put one down over here for one touch of the bottom. That also coincides with that white line you could see, which is a clone of this trend line over here, and breaking below that line, that would signal some type of, let's say, trend change in the dollar. Is that my expectation? No, we've just reverted to the mean of the channel right now. This was healthy for the continued dollar move to the upside. Let's see what happens. Will the dollar do anything before this Friday's non-farm payroll? Will it do anything before next week's FOMC meeting minutes and the CPI? I imagine that the CPI will be the trigger. Now, my expectations for last month's CPI were entirely wrong. I thought that, well, as far as the headline, I did happen to nail it, but I did not expect for every component of the CPI to be continuing to rise except for energy. So I was completely wrong where it matters. And that was a big surprise to me. And we saw since then, the market began tightening in or pricing in, tightening to perfection. Now, since then, it's actually eased drastically, right? And I don't know. Like, did you see all of a sudden that my tone and that thought, that little bit of tangent went nowhere? Well, there's no conclusion to be made of it. But what I'm doing over here is analyzing the market. And that's very important. That's very similar to system development. When you're developing a system in the markets, more often than not, a lot of the work you put in winds up going nowhere. But it's absolutely necessary to get where you need to be. So either which way, Thursday CPI, the 13th, October 13th, I think that why right now I do not have any personal expectations. We only saw energy coming off. By the way, we're looking at OPEC. We need to talk about oil, and I'm going to build into that, right? Oil is potentially getting ready to look attractive over here from a fundamental standpoint. Why? Because we're looking at the finishing depleting of the strategic petroleum reserve. So all of that extra supply that has been put onto the market is going to all of a sudden stop. And then we're looking at potentially tomorrow, OPEC getting ready to tighten their output by even maybe as much as 1.5 million barrels a day. This seems to me, even in the face of this potential global recession setting up, maybe a place where if we're going to see this risk rally go from a bounce into a legit rally, it might be a place to look at oil. I'm going to take a look at it and see if it's something that's of interest for myself. Again, many people, oh, by the way, the dollar, we're just in the middle over here, right? Not only dollar, we're touching this area of resistance, now support. So coming in just below us a little bit, we have an area of support. Let's mark that up in the chart. Let's get this in over here. And it comes a little lower too. We'll just put them both in over there. We'll be watching this week. And we got this area over here coming into support. We'll be watching how price acts if it is able to make it into the support or even the prime trend line over here. But our expectations right now is that price has just reverted to the mean, and that set us more neutral. That's a good place to be. Taking a look over here at crude oil, up, look at that. So this would have been nice, by the way. Of course, I completely missed it, right? But this would have been beautiful place to begin an attack on oil. I wish I got that entry, to be honest, because right now oil is again beginning to look attractive to me. I'm looking at it right now. It's coming straight into resistance, right? So there's nothing I could do but be a bystander and watch what happens at this particular point. So all as I did, by the way, was very quickly notice without explaining to you why that was attractive. I circled the breakout of the trend line, right? So this is the trend line that we had put in place. We had the breakout. I just want to explain with y'all, right, why I did that so quickly. First of all, there's a decent amount of room between entry into the first area of resistance. So that makes that a potential valid trade to take because there's plenty of room to take the entry. And by the way, if that was your stop loss, right, it is a one-to-one. It's a greater than one-to-one risk reward coming into that first target. That's exactly what you want because as you move into that first place, all you're doing is maybe taking a little bit off the trade, maybe 10 to 15% of the total trade. But more importantly, what you're doing is now moving your stop loss to break even. So that trade, the one-to-one risk rewarder, the one-to-one risk rewarder is now much better. No, your risk to reward overall increases. So it's not really about what your initial risk to reward is as you begin the trade. It's what you manage the trade and how you manage that trade to what the overall risk to reward becomes. If you would have took, by the way, that is your stop loss on this entry, that's not even a one-to-one over here. It's not, I think this would have been much better, honestly. What happened after that though, right, is you saw entry over here, price came up, came back in and tested that already and has resumed up. So that also signals, you know what, as we come into the resistance right now, as price is moving into that resistance, putting it right below that last area now, moving that stop loss to break even or maybe even a little bit lower than break even, it seems like a really good place. Now, it's true the market could come back in and the market could take that out, right? Well, that's fine. I'm not attached to any one given trade and then continue to move back up. If that happens, you take the break even. You don't get all down in the dumps that, oh, I can't believe that this thing came back down, took me out, and then resumed up and I missed it or anything like that. No, you get back out and you wait and you look for the next opportunity for the trade to develop, whether it's to the upside and or downside, and that's where you look to attack again. And so I'm looking at oil a little bit. I'm actually looking to take here a position, but I can't. I missed it, and we're now into resistance. So I'm on the sidelines, and I'll be continuing to watch it with all of you. And why we look at that, I also want to look at the U.S. dollar, Mexican peso, because kind of missed all these opportunities over here. And the reason being is because if I were taking a position on oil, I think I might like to counter that position. I think it would be going double short the dollar, but along against the Mexican peso to collect that swamp while I hold that oil trade that's a position trade I'm looking to put in. So I'm looking to do that off of a swing trader's mindset and entries and then see if I'm able to turn that into any type of position trade. But I don't see anything over here. I do know the only observation I'm going to make, I don't know if this helps you or not, but it's helping me, is that why the dollar has come off, why the dollar tagged 114 and has reverted to the mean, that we are looking at, in fact, indeed, the Mexican peso continuing to outperform the dollar. And then I'll jump back over here. I want to take a look at the yields with you, right? And we do have, indeed, a good old-fashioned sell impulse taking effect right now. And true to form, that was our expectation, but we're seeing breakdown and a retest right now. All right. we're coming in for the retest is really important to see whether or not it fails. Getting it back that area over here will be a failure. Now, that's actually not a good look. Let me jump down a little bit lower with you. The reason I say that is because this is the resistance now, that trend line. So that's the note I'm making with all of you. Let me extend this out over here and give this room right now, right? That's the resistance. Getting it back above here, which would be a little bit higher than that. That would be, I would say, higher than 3.8 at this particular point in time. If it extends further out, forget it, but I'm so sorry about that. If it extends further out, meaning if price continues to still stay below the green line, even if it rises up over here higher than 3.8 in that area, that's still above that green trend line resistance. Price needs to get back above it in order for that sell impulse to be negated. And we even have, or the way that you do that over here is take the high price over there. And as long as price stays under that, you are looking at that sell impulse in play. We'll see what happens. Obviously, that's going to be very dependent on what happens over the next week as we look at the really, really important data-dependent market, looking at some pretty impactful events. What else I wanted to take a look at or make the note to you really quick is that I can make the observation, as I've brought up to you a lot, looking at the reverse repo, the amount of money being parked overnight at the Federal Reserve, free money, parking your money overnight with the Federal Reserve and getting paid out interest on it. And it's been a massive amount of money. Was it $2.4 trillion? I just want to make the observation with you that you could see what happened is that we see that you see how price ticked down a lot. All of a sudden, a lot of money was moved off of the sidelines. Now, I don't know whether or not that is something that is going to continue. I could look back, for example, over here, and you could see that occurred, and then all of a sudden we saw that faded. You could see other instances of it happen over here. Here's a big one. But if we start seeing not this one move over here, but it is usually, right? A trend begins with one day. If we start to see actually a continued, let's say, pulling away of liquidity that's been on the sidelines and parked at the Federal Reserve, it will be interesting to see whether or not that whether or not that money is moving into the bond market or not. So we want to watch this over the next week and see what happens and whether or not that was the start of anything that is going to provide signal, or if that was just nothing, but our observations continue. And that is really what it's all about, is continuing to observe the market, make observations until something becomes very clear to you. I'm watching over here. We're looking at what the observation I'm making is that Bitcoin is kind of lagging on the way up over here off the bounce. And I'm seeing a sharp move in gold, and I'm seeing a sharp move in commodities, right? And well, that's all good. I don't have too much more to add to that or why it could be happening. I'm sorry about that. This is gold down over here, right? Let me check. Nope. Okay. That is the Russell 3000 over here, and it is also moving up sharply. These are things that off of a bottom that actually do move up. My expectations would be to see the Russell 3000 really moving sharply up. My expectation would be see Bitcoin and crypto also moving sharply up. They're not. So again, making those observations. And I think that it is a little commodities. Yep, we would have that expectation. Gold is a little bit of a surprise over here. So that's fine, but we'll make that observation, and that's all. That's all I wanted to take a look at that. And then I want to come over here to currencies making up the DXY, moving off of this sharp move off the dollar. This is as it occurred in real time. You could see the British pound over here is up massive, putting in that massive V over here. At the time we saw the turn, there's a tweet. I wish I could pull it up. I think it would be a lot more effective to pull up the tweet. Maybe I'll do it tomorrow, where I said, watch if this is where the DXY takes a turn. And that was, a lot of people didn't understand why or how that could happen. They thought that if we were seeing the Bank of England move towards easing, at that point, we would see actually a further strengthening of the dollar. We'll take a look at that tomorrow. I just don't have it pulled up and or ready as I came in over here cold after being away for 4 days. But I think it's been a pretty strong and solid session for real. And that's a good way to come back after being gone. Yeah, curation. I'm with you. I'm not following where you're coming off of because I'm late to the comments, but this is indeed a breakout occurring of this trend line. What I'm trying to say is that why this breakout might actually draw a lot of people into the market, and if you could see from a risk to reward, it makes for a good entry and place to take the trade. My concern over here, or what's more important, is watching this on log scale. And you could see we have some major resistance coming into the market. Let's just call it somewhere around right now, 28,000. The longer it takes price to get there, that line could come down, right? If that doesn't happen until December, all of a sudden you're looking at, and you could see, I don't have to point it out to you, that's the bottom in May of the lunar collapse. And then over here, it's that peak of that rally that we saw over here coming into the middle of August. And you can see those are, depending on what happens. I'm not even trying to go that far. We're just looking at this bounce that we're seeing right now and to see whether or not it's able to move and become some type of rally. I think that the bounce today got a little bit of extra juice. That juice coming from the signal, the sign that we are seeing a little bit of easing of expectations for the tightening coming out of the Bank of Australia. And that what we want to see right now over today, tomorrow, is some short covering. Like the shorts haven't even begun to cover. Talking mostly about equity markets right now. If we start seeing a little bit of short covering enter the market, this bounce could become quite the rally. And you could see from a tech, I'm going to point out two things to you. This is looking at the NASDAQ. The first thing that I want to point out to you, feels fuzzy. Oh, yeah. Okay, now I'm remembering. We did this live together, and what happened over here, right? We talked about coming into resistance that morning, and it was not just the trend line resistance. We talked about the horizontal resistance here and here. And then we could see as we broke the line over here, this is our Thursday's analysis, that we came into the resistance. It was rejected. I'm going to extend that line exactly where it is down further, right? And then I could see over here this wick. And then what I'm doing now, just for fun and with you, is moving it over to where the top of the wick came into, right? And just making the note of how then that was easier to do. This is the way we had it or left off. I know that it wasn't here on Friday. I know it wasn't here on Monday, right? Just extending the line out. We were here as we came into the resistance, and this is where we did our Thursday analysis. What is interesting, and this is kind of like just making an observation, it's very important, but that if we would have or had moved it over to the top, notice how it would have been easier to manage this touch over here coming in. This breakout over here, I think that it still would have been overly cautious, wouldn't have been interested in it because we have the resistance above. Notice we had, it's almost a one-to-one. It's not though. Notice on WTI crude, there was more room. There was a one-to-one into that first resistance. We're coming into resistance now on the NASDAQ. And if we are able to make it above here, above 11,800 area, above that horizontal resistance, that's where we might see really some short covering. If we start seeing today, tomorrow, Thursday, the most shorted stocks, start to see them really putting up some big gains, that will be a sign that this rally then is getting the next catalyst that will be able to extend it further. So we'll continue to watch that, and I think it's going to be the same analysis over here on the S&P 500. Actually, S&P 500 is leading on the way up. I'm going to go ahead and just do two things. I'm going to extend that down just as I did the first time. Make the same observation. It would have been easier and cleaner moving it off after the rejection of the resistance, why we were able to stay like visually into the, not something I was trading, but why we were able to real time visually stay on the right side of that. After that, it would have been better moving off the top of the peak, as that's what the market then was paying attention to. A breakout over here on the S&P 500, you could see coming into the first resistance, the risk to reward was better than on the NASDAQ. And you could see the S&P continuing to lead up over here as it's now heading towards or the next bit of resistance is way overhead. So it looks like this bounce could continue. It truly does. We don't have any immediate catalysts coming into the market until this Friday's non-farm payroll. I don't think that's as important as next week's CPI. So good session to get going over here on Charles. So what I did say, I didn't say that. But what I did say, hold on, let me find the dollar chart. I mean, I think you could just pull back on the stream, on the red stream thing on the YouTube. And if you go back maybe I think about 10 minutes, you'll see where we're talking about the DXY and you'll be able to see these yellow lines over here. But what I did say is that true to the way that we called it, and when I say the way we called it, Charles, I talked about the DXY coming into that and tagging that 14-year trend line resistance. And then I said, well, if we break down for over here, this yellow line, that we would be looking at mean reversion in full effect. And then this morning we could say, oh, well, that happened, that we reverted to the mean. The mean is the center of this upward sloping channel, and that brings us neutral. That's all. That brings us neutral. And you can see some support below over here. We put out the next areas of support. So we're just neutral on the dollar. All right. That's all. Curation. The great question. And by the way, PS, not only is the trading view, it stopped printing in August, I think, right? But if you move over to the Fred charts, the last I spoke with you on Thursday, I told you that I was looking for an update of those charts. Those charts also lag by like a month, and it was the 25th of the month the last time the charts were updated. I haven't even seen it yet. I don't know, right? I'm gonna wait for tomorrow. We'll look at that tomorrow for sure. That's a great for not only like it's a great question. It's very important to be looking at and something that I'm excited to take a look at with you. We'll do that tomorrow. All right, everyone. If you are on your way out this morning, if you're on a mobile device, please on your way out, go ahead and take a second and to hit that thumbs up. I think that the quality of the content, what we do over here today, this morning, definitely deserves that. And I would appreciate that. Thanks for being here this morning, everyone, putting in the work, putting in the time. Big shout out to everyone. I look forward to tomorrow's session, and I'm so happy to be here with all of you. No, that's okay, Charles. I just wanted to clarify that we weren't calling a top in the dollar. But and just since you missed the other analysis, if we broke down over here, let's call it right now, and the reasons why, if you want to go back in the stream and watch it, was really presented nicely. But it would be a breakdown of 107.80 at this particular point in time. You can see it's breaking outside the channel. It's a one-touch channel, and then also this 14-year clone trend line. That would signal that the dollar has had some type of trend change that really took place. We're far from that right now. All we've seen is some good old-fashioned mean reversion off a really sharp move, and that's reset the dollar back towards neutral. I think it's too soon to be looking for any type of resumption upwards on the dollar, but we'll have to be watching as we come into the support how price is able to react. Thank you, my brother. Thanks for being here. Have a wonderful day, everyone. May God bless you, and I'll see you all again tomorrow.